Good afternoon. Today is Monday, June the 1st, 2020. And I'm about to execute a couple of trades in my account. As you can see, I currently don't have any positions on. And one trade I'm going to execute, I want to own the share, so I don't mind it if the stock goes down. It's called XOM. Okay, so I'm going to click on trade. Sorry. Now I'm going to do XOM. Now the stock is trading at 46.34, as you can see. Okay, and I'm going to do a weekly trade. So with the kind of money I have in my account, I'm going to do a type of trade where, okay, I'm going to sell the $46 strike, which means I want to buy the stock at $46. It's currently at $46.32, but I want to buy the stock. I don't mind owning the shares. So what I'm going to do is I'm going to click on this 65 cents right here. Okay. And then what I also want to do is click on this 48. Click on this 20 cents. So basically what this is saying is that if the stock goes below 46, I'll be obligated to buy the shares at 46. If the stock goes above 48, I'll be obligated to sell the shares at 48, even though I don't own it. But what I would do is just purchase the shares before it does that. So, and I'm going to do about 3 contracts. Okay. Now I'm going to click on this little up arrow here. Actually, you know what? Let me take off this leg here because I want to see how many, if I had to buy the shares, okay, 13,000. So I would make $192, okay. I would be risking 13,600. So that means if the stock goes to zero, I'm out $13,000. But the stock is not going to zero, especially by Friday. So I'm gonna click on this and then say 3 contracts as well. Click on this 255. I want to do 4 contracts. So 344. Okay. So let me see how much I would be risking. 18,000. Okay, I don't mind that. Okay. Let's do 4. Okay. Now let's see how much they will set aside for this trade. $3,565 they will set aside for this trade. I'm going to click send order. So you see I'll make $344 this week. Okay. So if the stock, and this tells you, right, this is why I like Tastyworks, because it gives you what you need to know. If the stock of X price XOM winds up being greater than 45.14 and less than 48.86, your maximum profit is $344. So you see, it's simple enough. I want to see what my total return on capital is 1.39% right here for the week. Okay? Most people don't get this in a year in the bank, having their money in the bank. And I got a 58% chance of making money. That's what that POP means. Probability of profit. I got a 58% chance of making some money. So I'm going to click review and send. I don't mind that. Okay. The trade didn't go through. Oh, it's working. Let me edit it. I'll collect a little less. So $332. Perfect. Trade went through. Okay. So that's one trade. So that's $332 I collected. Now I'm going to do another trade, but this time on an ETF. You guys heard of the Dow 30. So that's basically the top 30 stocks in the stock market, or in the United States, actually, should I say. The top 30 stocks in the United States. And so now this stock, this ETF is $255.16. I'm not looking to, I'm going to do what is called a Iron Condor. And basically, or a credit spread. No, an Iron Condor. So basically what an Iron Condor is, it is basically two credit spreads. A put credit spread and a call credit spread. Okay? And what I want to do is change the expiration because I want these to expire this week. I want to see if I can make some easy money this week. So with the ETF at 255, I'm going to agree to buy the stock, the ETF at 249. So if the ETF falls below 249, I will be obligated to buy the shares at $249. But what I'm going to do is offload a lot of that risk, and I'm going to buy the 248. So what this is saying is that if the stock falls below $248, I'm obligated to buy the stock at the ETF at $249, but I also have the right to offload those shares at $248. So I basically would be risking $83 to make $17, okay? And my probability of profit, as you see, is 78%. So I got a 78% chance of making money on here. But to complete the Iron Condor, I have to do the call side as well. So I'm going to do 262. Actually, I'm going to do the 261. Okay. Collect 67. So that means if the stock goes above $261, I'm obligated to sell the shares at $261. But what I'm also going to do is buy the $262 strike. So what this is saying is that if the ETF goes above 262, okay, I will be obligated to sell the shares at 261. I will be I have the right to buy the shares at 262. So I will be losing money on this end if the ETF goes past $262. So basically, I would be risking $61 to make $39. That's an acceptable risk for me. My probability of profit drops down to 56% because why? Now I have risk on both sides, and only one side can go in the money, or one side can work against me. Both sides cannot work against me. But look how my total return on capital, 7.25%. So if I'm right, I make a nice 7.25% in 4 days. You can't. That's good. Okay. I'm going to do about 5 contracts. So to make $195, I'm willing to risk $305. So that means even if the other trade works out for me, which it will, even if this trade doesn't work out for me, I'm still going to make money. So this is what you almost call guaranteed profits, folks. Okay, click review and send. And this trade is great for those who have small accounts. So like tomorrow, I'm going to be executing a similar type trade in my wife's account. And my wife's account is a lot smaller. So I'm going to show you how that works tomorrow. But as you can see here, this is the confirmation page. So I'm basically selling 5 contracts, okay, an Iron Condor. The net credit is $36 or 36 cents. Times 100 shares is $36 times 5 because it's 5 contracts, so that's $180. Okay. I'm risking $320 to make $180. This is to me an acceptable risk to reward. I just got to click this as a day order. All I'm risking here is $342. So basically, my buying power, has been reduced by $342. But all I'm really risking is $320. So this is sweet. Click send order. Okay, the trade is working. Let me edit it. I'll collect a little less. Let's see. So let's see if I can get 160, risking only 340. Oh, the trade must have went through because it says here from your broker, this order could not be updated. So that means the trade went through. So, as you can see, I got 2 positions now. XOM, which is ExxonMobil, my first position, I collected $340. Now, if the stock goes up, but it doesn't go above my call strike, which is, if the stock doesn't go above $48 by Friday, the stock is at $46.20. If it doesn't go above $48 by Friday, not only do I not have to buy the stock, but I get to keep all $340 that I collected. On top of that, the DIA, which is the ETF for the Dow Jones,